Alrighty, what's going on, guys? Edward here, back with another video, and this time I want to talk about market structure. This is a subject that I've talked about a lot on my channel, but this is so important, and I always try to keep you guys updated and giving you the best tips uh, to get you out of doubt, to stop overthinking too much and making things so complicated. You know, I know trading is not easy. It's not easy, but when you make it look harder, it's gonna get harder. It's gonna get very complex for you. In your mind, you're gonna be blocked, basically. So, guys, don't overthink too much. I know market structure is not gonna be nice all the time, depending on what you're trading. This video is gonna be short. It's not like I'm not gonna uh, take too long on this one. I want to talk about specific little things and little details because I have talked about this several times, and I actually do have a playlist on smart money concept. You can watch it right here at the top right corner. I do have a playlist right there. I have over 60 videos on smart money concept. You can call that a free course on SMC. You can watch it. Let me know what you think. But at the moment, I want to emphasize on one single thing, and it is direction. I I always happen to get better results when markets are easily trending. Okay, when markets are clean trending, good. Um, Sometimes it's not going to be that nice. The markets are not going to be that nice, but it's easy to see. For example, in here, I'm on Euro JPY. It's sort of choppy. We can like it's, but it's still bullish. Like market is creating higher highs, higher lows, right? This is a higher low, higher low, higher low, higher low, and also higher highs at the top, right? So it's pushing up. It doesn't have like an angle, different angles. Sometimes we're gonna encounter trends like with different angles. Like if it's like that, if it's way too fast. If it has an angle like I don't know, something like this, the trend is very volatile. It means that there's some sort of news or something is going on, but if they have a certain angle, sometimes I like it when they have like a 45 sort of degree angle. Those trends are nice. They are last longing, and we can ride them all up. But it's what I'm going to show you right here right now is just be focusing in one thing, and that's going to be premium and discount, guys. Premium and discount. I was not paying that much of attention as I'm paying right now to premium and discount. Okay, and this makes it so much easy and simple for me to just simply, you know, take the risk in any position. If I'm buying, if I'm selling, I always use the premium and discount. Okay, and it's very simple. Let's suppose we have let me get the pen tool. So let's say market is coming like this, and then pull back, then we have a break. Yeah, maybe like that. So something like that, right? So what I normally do is I mark my Fibonacci, right? Something like that. So from the lowest point before the break and the highest point right there, right? So I have a break right here. I'm going to focus on this break. If I see the market recently created a break of a structure, or broken a structure to the upside, what is this telling me without even seeing much further behind? Like it's really not that necessary, to be honest, depending on what you're trying to do or what's the actual plan. But let's say we're just focusing from here. I don't care whatever it's behind here. I don't care. I am just going to focus what happened right here. Did the price close above? Yes. Price pushed up even a little bit higher. All right. What am I expecting? I'm expecting a pullback. Okay. Markets move in waves. They move in waves. Okay. They will always create an impulse and a correction. Impulse, correction, and so on. Of course, sometimes it's going to be ranging, right? But if we are trending, it's going to be doing a pullback eventually at some point. Okay, it's sort of predictable. You don't have to be a wizard to understand that the market will pull back or when it's going to be pulling back. That's one thing we don't know, right? When it's going to be pulling back. But we understand that eventually price will have to pull back. This impulse is not going to last forever, right? It's not going to last forever. Otherwise, everybody would be rich, right? If this sort of impulse will last forever. So what we do is just wait for the price to be at the discount in order to go buying. As simple as that. This is the premium. Anything above the 50% on the Fibonacci is premium, and anything below the 50% on the Fibonacci, it's the discount. So we buy low, we sell when the price is high. Okay, I'll explain that. But we buy when price is cheap. Our job is to ignore, if you happen to spot maybe a little POI right here in this area, there's a little demand that you spotted right there, and you want to take that buy. It doesn't make sense to go buying right here. Why not? Because you are on the premium. Price is very expensive. So you are in a seller's zone. This is a zone for sellers. If you buy right here, you're most likely are going to get in trouble. You're buying when price is too expensive. If you're buying right here, this is most likely a trap, a smart money trap, right? For beginners on smart money trading. Your job is to wait and look for a POI within the 50% on the discount, and this is where you're actually going to be looking for the buy. Okay, as simple as that. Don't complicate things, guys. Don't complicate things. This example just right there, I just pretty much told you everything. Okay, so let's focus on this structure right now. I see a very recent break right here. Hold on. So in this area, I see a very recent break. Nice break to the upside. What is this telling me? Price wants to go up. As simple as that. If it breaks to the upside or to the downside, price wants to go up. Something is pushing the market up. Okay, so I'm going to use my fib from the lowest point. It has to be the lowest point. It's not this area. It's not this area. It's this area. It's this low. The lowest point before the break, right? All the way to the high. Okay, so what do we have? Yeah, let me stretch it a little bit more here. So you see, price after that impulse, price pulled back. It got into the discount area before it pushed up. Oh, but Eduardo, it failed to, like, it touched right here. There was a nice demand zone, but it failed. Yeah, it's going to fail too. Like, sometimes you're not going to be seeing a clean or very clear demand zone right here. It's your job. I'm like, what I'm trying to explain right now is not to catch or focus on the order blocks right now, because I do, as I mentioned, I do have a lot of videos on that. I'm just talking about the structure and the premium discount, right? Sometimes, yes, this is going to happen. You're going to be stopped out. Let's say you were looking for a buy in that position, right? Because you are in the discount zone. Sometimes price is going to do that. We are not wizards. We don't know exactly when the price is going to stop right there. Like, I would have taken this one for sure because it's the cleanest one I see. I would not be taking this one. Like, I would not be marking up my order block right here, or taking this entire big candle right there, because I don't know, right? I'm not a wizard. I'm not just saying, "Oh, okay, yeah, this is the actual order block." How would you say this is the actual order block when you have more momentum right here, more candles inside this sort of messy thing right there? Very ugly, right? It was not nice. Anyways, stop you out before boom hitting your target. It's going to happen. This is going to happen. It is going to happen. Okay. Next, so what do we have? We do have now the break. The price actually broke now to the upside. We have another boss. Now, what do we do from here? Simple. Again, you use the Fibonacci from the lowest point before the break. Remember, it's not right here. It's not right here. It's not right here. It's this one. Okay, to the highest point. Where did the market go? It pulled back to the discount area before broke the next high. So price, it didn't impose a correction and then impulse. Oh, but Eduardo, the market did not mitigate. Depending on how you mark your order blocks, as I mentioned, this is not a video about the actual entry. It's more of of a uh, the structure. But right here, if you wanted to catch maybe that entry, maybe that was the order block, that one right there, right? Or I see there's other people trying to mark it up, like is that one. You know, that's where the imbalance was, pretty much. So if you did it that way, fine. If you did it this way, it missed it. So it missed your entry before the price went up and hit the actual TP. Okay. So what do we do now? We do have another break, right? Price recently broke another structure. We have another boss, right? Now in this case, again, what do? We use the fib from the low, right, to the high, right here. We simply wait for price to be at the discount, right? It looks like there was an actual, yeah, I would normally cover all this. This is actually how I would do it. So it went to the origin. You see that it had also one little one right here, a little POI right there. Looks like that one failed, right? Price ended up going to the origin all the way down to the extreme before actually, pushing back up. So, but you see what is happening, guys, and just by simply understanding that we have to be looking for buys right here, we're going to be ignoring any sort of formation POI that is within the premium zone. You don't want to buy when the price is on the premium. You want to go selling. You see that this area actually gave a sale. It gave a nice sale, sort of right there. There was a nice supply, right? Price mitigated the zone before dropping, then getting into the demand to then boom, buyers getting control. So understand that premium and discount is basically this area. This area right here is a seller's zone. We don't buy from here. It's very expensive. We sell expensive. And when the price gets to this zone, as simple as that, you have to understand where you're standing. I always say this: where are you standing? So you are right here at the moment. We are in a discount. We are definitely in a discount area. Okay, so it's a good zone for buyers. Okay, I'm sorry, I meant to draw a D. Ah, all right, that's a D, and this is a P. All right, so premium and discount, right? So we only buy from here. Simple as that, guys. The rules, you put the rules. You set your own rules. Okay, you set your own rules. What sort of rules can you put here? Guys, simple. If you have a break of a structure to the upside recently, just it means price wants to go up. Use your fib from the low to the high. Wait. Just simply wait for price to be at your zone in the discount area. So wait for the price to be in the buyer's area. Right here, at the moment, price is on the seller's area. Price may still continue pushing up. Maybe the impulse has not stopped just yet because sometimes there's so much volume that the price will continue pushing up, pushing up, pushing up. It's best to wait for the pullback and to be for the price to be on a buyer's zone on a discount area. Okay, to continue with the buys. Now, what would happen if we were selling? It's just basically the same thing. It's just the opposite side now. Let's go ahead and invert this thing. So we're selling now, right? Simple as that. Price recently broke. What you do, you use the fib from the high to the low. You wait for the price to be where? And the I'm sorry, at the premium, right? Because this time now we want to sell high. We want to sell when price is high. So we are in the premium. Price went all the way up to the premium, right? Drop. There are some ways that you can actually, because I have done it as well. It happens to me. I still make mistakes. And there are ways for you to actually sort of go buying right here, and is by trying to anticipate the end of this pullback. I'm sorry, the end of this impulse and the beginning of the pullback. You're trying to anticipate the beginning of the pullback. How do you anticipate it? But maybe in lower time frame, you can spot maybe a chalk right here. Let's say you're coming from the daily, right? Once the price starts stopping right there, you can go in lower time frames, maybe 4 hour, 1 hour, 15 minute, and you spot maybe a chalk, and you think the price will go bullish momentarily while it's just pulling back on higher time frame. It's just pulling back into the premium area. So you can actually do that. For example, right here, you see that the market build up a little demand zone in the market after this sort of break to the upside right here. In lower time frame, we have a boss price pull back, mitigated, boom, targeting this high, right? And price is trying to get into the seller's zone, in this case the premium area, right? So you see, you can still catch buys, but it's risky because you're going against the trend. And overall, you're going against the trend because recently you had a boss. This is our dominant thing right now. The most recent break of a structure happened here to the downside. So it means price is supposed to be bearish, right? However, you can still catch the beginning of the pullback. We're trying to anticipate that beginning of the pullback. This is where most of my losses are coming from, actually, when I'm trying to anticipate the end of the pullback. If I'm patient enough and I wait for the price to be and the discount, I'm sorry, on the premium, I have my most wins right here. But most of my losses are actually coming from here, from trying to anticipate that pullback. And I have to admit it, I have to say, that's the truth. That's where actually most of my losses are coming from because I try to anticipate that pullback. Okay, and that's that also most of my students are actually having the same losses right there. So it's your decision. At the end of the day, it's up to you what you're going to do. You're going to find opportunities. You see the price drop. You have a most recent break. Can I catch buys? Yes, you can catch buys like it did here. You see, you had another domain, nice domain zone, and it makes sense to go buying. Why? Because you are in a discount. You see, you are in a discount area, premium area. So it sort of makes sense to go buying short buy, not a long sale, not a long buy, because in overall we are bearish. So you can take a short buy, perhaps to targeting, if this was your entry, your take profit would be here. That's your take profit. Okay. That's basically it. Okay, I cannot be targeting this high because targeting that high means the price will do a chalk in this time frame, and maybe it's going to change the direction. But as I mentioned, I'm not a wizard to guess that okay, this is when the chalk is going to happen. So I'm not guessing. I'm trying to follow what the market is sort of telling me right now. It's fine to go buying right here, but I will like my target is going to be that high. That's normally the complete the target when it comes to order blocks. You know what I mean? When the targets are. So I hope it makes sense, guys. Let me know what you think. As I mentioned, I'm not focusing on the actual order blocks itself and where to enter was the high probabilities, POIs, and all that stuff, because I have a lot of videos based on that. And you can go on my playlist right here at the top right corner. I have over 60 videos in there. And the playlist keeps growing because I do post content very often. Let me know what you think. Give it a big thumbs up. Subscribe if you're new. It motivates me to keep posting videos for you guys. I know it helps. So let me know what you think. And I'll see you guys in the next one. All right, take it easy.